The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Curve's native token, CRV, has fallen roughly 20% in the past week. And Kaiko is out with some new research since the exploit that puts more than $100 million worth of crypto at risk. Not the research, but that's how much is at risk. Joining us now to discuss the latest with the Curve exploit is Kaiko research analyst Riyad Carey. Welcome, Riyad.
Hi, thanks for having me.
Glad to have you on. So let's start with CRV's price. Unpack it for us here. I mean, we saw this downturn, of course, and we actually saw a couple of interesting things yesterday. There was a little bit of a sell-off. There's some discussion that the founder of Curve might be doing some OTC trades, which aren't necessarily seen on exchanges, but can be found on the blockchain. So can you talk a little bit about all that?
Yeah, so the founder and CEO of Curve had deposited about like a few $100 million worth of Curve tokens on a variety of DeFi lending and borrowing platforms. Sort of using these tokens as collateral, he had borrowed about $100 million worth of stable coins. So when Curve was hacked, there was a lot of concern, basically, that this position would get liquidated, which would have sort of huge ripple effects that we can get into a little bit later. That has not played out yet. We did see that because the Curve ETH Curve pool was hacked, you can see on the chart there that the price of Curve briefly dropped like below 10 cents. That was just on Curve. And then on Uniswap, it also dropped as well, compared to centralized exchanges where, as you said, it dropped about 25%.